Donald Trump didn't listen to the almost $7 trillion erased in the stock market in the 2 days after Liberation Day. He didn't listen to Republicans who were warning that his tariffs would get in the way of TCJA extension. What finally made him blink? The bond market. On Wednesday, Donald Trump shocked everyone by saying, we are going to suspend those quote-unquote retaliatory tariffs on every country except for China and just stick with the 10% for a 90-day negotiating period to finally get a deal on the table. And the reason why is because of the bond market. Over the weekend, it was very ignored, but you had CEA Chair Steve Moran give remarks to the Hudson Institute where he said the burden of the US dollar status as the world reserve currency has caused persistent currency distortions and unsustainable trade deficits. And what did investors around the world hear? We don't want to be the world's reserve currency anymore, which of course would be disastrous. That's the only way we can finance our $36 trillion in national debt. And so ultimately, when you have those treasuries, which exploded from immediately after Liberation Day, the 10-year bond yield dipped down to below 3.9%, which is quite low. By Monday, it was over 4.5. That's a massive swing in the bond market. And bonds are inverse from stocks, so the higher the yield goes, that means the weaker the bond market is for the US. And I think that is what scared Trump, because he understands you cannot finance the national debt if you're paying 5% net interest costs. And that's the real tariff story.
So what do you make of the criticism that the Trump administration's messaging has been all over the place, right? Because you have some of the president's advisors out there saying the goal here is to reshore American manufacturing over the long term. And then you have others saying, the primary goal here is actually just to renegotiate better terms with our trading partners and then continue on our globalized economic journey. So some would say that those goals appear to be in tension.
Oh, they directly conflict. And I think it's pretty clear that the true protectionist believers, Peter Navarro, even to an extent Howard Lutnick, they're in the back seat. And now it's all back to Scott Bessent's game. Because Scott Bessent is someone who said, hey, let's make deals, right? I think we all want 0-0 trade deals. That would be great. That was also called the Trans-Pacific Partnership that both Hillary Clinton and Donald Trump campaigned against. But I digress. The real issue, I think, is not the idea of the obsession over trade deficits. The real issue, I think, is that for the first time, you had a member of the administration openly saying, we want to weaken the dollar and we don't want to be the world reserve currency. I don't even think Peter Navarro said that he doesn't want us to be the world's reserve currency. He's definitely said, well, we want to weaken the dollar. But that's a dramatic shot at a 100-year economic consensus where using the US dollar, it hasn't been a burden, it's been an immense privilege. And that freaked Trump out because Trump, as an investor, he understands how bonds work, right? This is not someone who I think has ever had to look at his 401k. I think he's fine with volatility in the stock market because in the long run, the stock market, obviously, the line does go up in the long run. But the bond market, he understands how you have to finance projects as a builder and as a developer. So I think going forward, I could be totally wrong because we know this is a presidency that likes to surprise us. But I think the focus will be on deal making and icing out China because they understand the American people support icing out China and they're willing to take a little bit of a hit to do it. Ticking off needlessly, the Canadians, I don't think that's super helpful.
Yeah, I think, the Trump administration has the backing of the working class and voters when they're doing protectionism maxing, when they're maximizing the protectionism that they can accomplish with these tariffs. But when you talk about destabilizing a global economic order that keeps everything around the world running, then I do think you get into sort of different territory than even potentially what voters voted for and what congressional Republicans and voters will tolerate.
Yeah, and the one closing note I will make about the direct penalty in the short run of destabilizing the dollar as the world's reserve currency, weakening the dollar because U.S. workers are paid in dollars. Doesn't matter if you are a millionaire CEO or on the front lines of a factory. You are paid in U.S. dollar. So the 5% decline since Liberation Day in the U.S. dollar, that's like a 5% hidden tax on everyday Americans.